Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by Amana, the region's first and fastest growing regulated all-in-one trading and investing app. Whether you're looking to invest in US stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, Amana puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let Amana do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, Amana offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code BlockchainDXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the Amana app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and Fintech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and Fintech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbour. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and Fintech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbour. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the details are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive. This is where we take a dense stack of sources. We're talking global crypto headlines, regulatory drama, market data, and we synthesize it all for you. Our goal is to give you that shortcut, to being the most informed person in the room. And today's Deep Dive, it's really a snapshot of the digital world colliding with policy and power. We've got this serious controversy with the U.S. government's handling of seized assets.
Which runs right up against some big political promises.
Exactly. And at the same time, you have this flood of capital just pouring into the markets. Then we're going to pivot to a huge story about the advanced AI push happening in the UAE.
It's a really crucial stack today because it tells a story of divergence. You've got the regulators still wrestling with these old ideas of forfeiture and custody.
While the market is just surging forward.
Surging forward. It's driven by these new powerful investment products. So our mission here is to analyze the data that's showing the strong market confidence, decode this major U.S. regulatory shift around staking rewards, and then look at how advanced Arabic AI is setting a new competitive benchmark.
Okay, let's unpack this. We're starting right in the regulatory crucible with a controversy that really cuts to the core of trust in government.
Right.
This is the Samourai Bitcoin case.
Right, and a very questionable sale by the U.S. Marshal Service.
So what happened here?
This is a complex and, frankly, a pretty thorny issue involving the Department of Justice. The sources are indicating that the U.S. Marshal Service seems to have sold about $6.3 million worth of forfeited Bitcoin.
And this was all tied to the Samourai wallet case.
Exactly.
So let's break that down. What exactly did they offload and how did they do it?
So we're talking about 57.5535 BTC. This was forfeited by the Samourai wallet developers, Lapicon Rodriguez and William Longren, after a plea deal.
Okay.
But the critical detail here is the transfer path. It went from the developer's address straight to a Coinbase Prime account.
A Coinbase Prime account?
Yeah, which now shows a zero balance. That implies it was immediately liquidated for cash.
And this is where the political promise comes in and creates all this friction.
All right. Absolutely. Because President Donald Trump made a very public promise at that Bitcoin Nashville event.
He said existing government Bitcoin holdings would not be sold.
Exactly. And this action seems to fly directly in the face of that commitment. Not only that, it appears to bypass or even violate Executive Order 14233.
The EO that he signed.
The one he signed, yeah. It mandates that any forfeited Bitcoin has to be held in the United States Treasury Bitcoin Reserve. It's not supposed to be immediately liquidated.
So by sending it to Coinbase, they basically sidestepped that whole requirement.
It seems so. It looks like the Marshal Service may have acted independently for the liquidation, circumventing that direct Treasury custody rule.
So that suggests a serious lack of coordination. Or maybe it was an intentional bypass of a federal mandate. What does this mean for the industry?
Well, the implications are more strategic, I think. The market hasn't really panicked yet. But first, you have to remember the jurisdiction. This happened in the Southern District of New York, the SDNY.
Ah, the SDNY, they have a reputation.
They do. This is the same aggressive jurisdiction that targeted non-custodial devs before, the Tornado Cash developer Roman Storm. It just shows the SDNY is continuing to assert its authority in this space, maybe independent of the broader political machine.
So we have the Marshal Service maybe going rogue, the SDNY being aggressive. But you said there's a political countersignal to all this.
We do. And this is probably the most critical signal for the industry. President Trump is reportedly considering a pardon for Rodriguez, one of the developers.
Wow.
If that happens, it sends this powerful message that a potential future administration is signaling a major shift, a much more crypto-friendly political stance right from the top. So this sale, it really forces the issue of federal crypto policy right into the spotlight.
Okay, so the politicians are fighting over old Bitcoin. Let's see what the market actually thinks about the future by looking at the hard data.
Yeah.
And those numbers, they tell a story that seems completely immune to all this drama we've just discussed.
The market's resilience is, it's incredible. I mean, despite all that noise, the total crypto market cap is sitting at a really robust $3.32 trillion.
And sentiment is neutral.
Yeah, hovering right around 49. But the really crucial insight for momentum comes from institutional capital.
And those ETF inflows are just a staggering vote of confidence.
They absolutely are. For the second day in a row, ETF inflows were up a stunning $645.8 million.
In the last 24 hours.
In the last 24 hours. That kind of capital injection signals a profound institutional confidence that we just haven't seen in previous cycles. And Bitcoin, it's trading at $93,877, up over 7% in 7 days.
And we're seeing analysts get extremely bullish because of this. Tom Lee of Fundstrat is predicting a new all-time high by the end of January 2026. Is that the consensus, or is he an outlier here?
That's a great question, and it's important to introduce a little friction. I mean, Lee's a respected name, but that prediction is definitely on the high end of optimism. The main counter-argument is the possibility of some significant profit-taking, especially if we hit that psychological $100,000 mark too quickly.
Sure.
That said, the foundation for his optimism is sound. We have ETF institutional access that didn't exist before, and a global macro environment that still really favors hard, decentralized assets.
Okay, let's switch gears and look at the underlying plumbing, the decentralized exchanges, the DXs. Those metrics are showing not just growth, but just staggering efficiency.
They really are. The total value locked, or TVL, is pumped up to $127.23 billion. DX dominance is high, at over 40%.
And the transaction volume is huge.
Huge. But here's the really fascinating part. The volume for DX has hit $13.46 billion, but the fees were a ridiculously low $72.23 million.
That level of efficiency is just staggering. What's driving the cost down so much?
Well, it signals that the competition among Layer 2 scaling solutions, the infrastructure that makes these DEXs work, it's driving costs down so aggressively that it's threatening the fee models of centralized exchanges much faster than anyone anticipated.
So the L2 arms race is an efficiency race, and the user is winning.
The user is definitely winning.
Okay.
For volume, you've got Meteor and Uniswap leading the pack. But the key trend here is that we're seeing the top 5 DXs all clear the $1 billion mark in 24-hour volume. That's extremely rare.
And we have to talk about stablecoins because that's the fuel tank, right, for future price action.
Precisely. A surge in stablecoin volume tethers at 1.78 trillion, USDC at 15.52 billion. That's a fantastic indicator of more capital that's ready to enter the market.
This is dry powder.
It's dry powder sitting on the sidelines. And historically, high stablecoin volume strongly correlates with an impending surge in asset prices.
Can you give us a quick summary of the market cap leaders before we move on?
Sure. BTC market cap is sitting pretty at 1.87 trillion. Ethereum is at 391 billion. What's really noteworthy, though, is the surge in XRP. It's up almost 28% over 7 days, placing it third in volume. It actually overtook Binance BNB for a bit.
That shows the money flow isn't just in the blue chips.
Exactly. And for a quick, almost absurd moment of market commentary, we have the meme coin leaderboard. Dogecoin is still leading, with a massive $25.56 billion market cap.
And the official Trump meme coin has also increased, right?
It has, to 1.11 billion,
Yeah.
reportedly boosted by all the recent political events.
So if a meme coin is being boosted by political drama, doesn't that just prove the market is pricing in meme value as much as fundamentals?
Oh, it absolutely does. It's a testament to the fact that cultural and political relevance can translate immediately into capital flow, even for these highly speculative assets. It's the ultimate reflection of market sentiment.
So that's the landscape of capital and politics. Now let's pivot to some critical industry developments that impact investors and users directly. We're moving from market resilience to these groundbreaking investor products, starting with a major milestone from Grayscale.
Yeah, this is a landmark regulatory shift involving Grayscale's Ethereum staking ETF, or ETH. This product just became the first U.S. crypto ETP to actually distribute Ethereum staking rewards to its shareholders.
And this is a tectonic shift. I mean, this was basically unimaginable under the old regulatory regime.
It is into something that looks a lot more like a yield-generating investment platform. It just simplifies access and removes all that friction and technical risk for U.S. investors who found direct staking too complex or too risky.
And this isn't just a one-off for Ethereum, is it? It seems to signal a broader regulatory acceptance.
Absolutely. Grayscale is already suggesting they'll adopt this strategy more broadly. They've already renamed their Solana Trust to the Grayscale Solana Staking ETF. The implication is clear. The U.S. regulatory environment is adapting to allow yield generation.
That is incredible progress. But we have to balance that optimism with some vigilance. Innovation always comes with risk. What about the recent technical and security setbacks we've seen?
We have two major issues here. First, a major reliability problem with Starknet. That's the Ethereum Layer 2 scaling network, designed to make transactions faster and cheaper.
What happened?
It suffered a system outage that lasted for 4 hours. This was its second major outage in just a few months. The team actually had to pause activity and revert the blockchain to a safe block.
An L2 outage is a serious blow to that whole scalability thesis. And what about the security breach with the major wallet provider?
Right, Ledger Wallet suffered a data breach. Now, it's important to say wallet funds are confirmed safe.
Okay.
However, the breach happened via their third-party payment processor, Global E, and it exposed customer names and contact info. This is particularly concerning because it follows that massive 2020 breach that affected 1 million customers.
So the analysis here is always the old mantra, do not trust, verify. But how does that apply when the breach happens to a service provider that's outside your wallet?
That is a crucial teaching moment. It forces us to realize that do not trust, verify has to extend beyond just your own hardware wallet to the entire ecosystem of service providers you interact with.
Your security is only as strong as the weakest link.
Exactly. The payment processor breach is severe because it proves that. So customers now just have to be extremely cautious against the inevitable wave of phishing attempts that this exposed data are going to trigger.
So the U.S. is finally opening up these new investment avenues like staking ETFs, showing how legacy finance is adapting. But that adaptation isn't just happening in the West. Let's pivot to the global tech frontier, where the UAE is making these massive strategic strides to compete with Silicon Valley in AI.
We're moving to Abu Dhabi's Technology Innovation Institute, or TII. They recently launched the Falcon H1 Arabic AI model, and this is now established as the world's leading Arabic AI model. It's a huge geopolitical achievement in that space.
So what makes this model so advanced? Is it just bigger?
Not at all, and that's the key performance nugget here. It uses a new hybrid Mamba transformer design. To put it simply, they've made the AI's engine far more energy efficient and faster by changing its core architecture.
So smart design over brute force.
Exactly. The 7 billion parameter version demonstrated superior performance, beating all the well-known Arabic models from Saudi Arabia and Qatar. It's a clear signal that speed and smart design can beat sheer size.
And what kind of performance gains are we talking about? Why is this so important for Arabic speakers?
This model is particularly strong in areas that are traditionally really hard for language models, things like math, logic, complex STEM reasoning. It handles multiple Arabic dialects seamlessly, and it dramatically improves the AI's ability to handle cultural nuance and complex meaning.
And it's available for public use already.
It is. It comes in 3 sizes and is already available.
That's impressive. So how are they applying this technology locally, particularly in a sensitive environment like the judicial system?
Abu Dhabi's judicial department is rapidly adopting major AI projects for its correctional centers. They have a dual focus here, enhancing safety and ensuring access to legal rights.
Okay, so what does that look like on the safety side?
For safety, they're implementing smart security systems, behavioral detection systems to spot risk early, and rapid response technology to act faster during emergencies.
And on the right side, how does the tech connect the individual to the justice system?
That's the rights front. They're introducing a new digital inmate request management system. This system connects inmates directly with the courts, enabling faster, more transparent access to their legal rights things, like parole applications or filing grievances. It's all part of the UAE's push for digital transformation, using automation to strengthen the rule of law.
Okay, so let's synthesize this sweeping landscape we've covered today. We've gone from regulatory turmoil in the U.S. through...
Well, blockchain needs AI to streamline complex processes. For example, AI could analyze all the data on a secure, tamper-proof blockchain record to vastly improve predictive analysis for things like safety and behavioral patterns in a correctional center. It would make the system more proactive.
And the reverse side of that relationship.
Conversely, AI needs blockchain to ensure trust and security. AI systems are inherently vulnerable to manipulation and bias, especially when they're governing critical public services like justice.
So blockchain provides the verifiable audit trail.
Exactly. Its distributed, immutable ledger provides a verifiable and transparent record of the data and the algorithms being used. That's really the only way to prevent manipulation and ensure public confidence in these powerful new systems.
That trust layer is the pivot point for the future of all of these global systems. So here is the final provocative thought for you to consider as you wrap up this deep dive. Which technology, AI or blockchain, has the greater immediate need for the other in securing the future? Think about the risks we discussed, the payment processor breaches, the potential for algorithmic bias, and keep exploring these crucial intersections of policy, technology, and capital.